Ripple Swell 2025 wasn't another crypto conference. It was a quiet shift in financial gravity, Wall Street, Washington, and Ripple aligning for the next monetary regime. When institutions stop observing and start building, the narrative is already over. So when the future of money is no longer being traded but engineered, are you the participant or the product? November 4th to 5th, 2025, New York City, the beating heart of global finance. Ripple Swell wasn't a conference. It was a transfer of power, wrapped in panels and polite applause. Over 600 attendees from 40-plus countries with names that move trillions: BlackRock, Citadel, NASDAQ, Fidelity, BNY Mellon, and the White House's Digital Assets Council. For the first time, Ripple's Brad Garlinghouse stood shoulder to shoulder with a Trump-era policy strategist, a handshake that bridged Washington's regulation and Wall Street's liquidity. Crypto didn't walk into the institution. The institution walked into crypto wearing a tailored suit. This wasn't about innovation, it was about absorption. Every handshake was a negotiation for control. Who dictates settlement, who decides compliance, who taxes the future flow of money. When Wall Street enters the room, they don't join revolutions, they acquire them. The crowd saw a summit. The insiders saw a merger of systems. So when the financial old guard moves their desks onto blockchain rails, will you call it adoption or occupation? Ripple didn't announce funding, it announced allegiance. A $500 million injection led by Pantera Capital, Fortress Investment Group, Citadel Securities, Brevin Howard, Galaxy Digital, and Marshall Wace, both architects of market structure, not traders of hype. Ripple's operations read like a central clearinghouse in embryo. Over $95 billion in processed volume, 6 acquisitions, a 25% share buyback, and 75 global licenses. NASDAQ's Adina Friedman added fuel, confirming 17-plus crypto firms are waiting for IPO approval once the US government reopens. Billions in sidelined liquidity are hunting for compliant rails. Ripple's building them quietly. This isn't a funding round, it's a capital alignment. Ripple isn't raising money, Wall Street is buying optionality. So when the new order settles, will you hold a token or the toll booth? While the rails debate plays out, another infrastructure story is moving behind the scenes. Let me introduce Unic, the platform that's changing the game in crypto trading. Unic's OTC exchange has already processed over $1.3 billion in OTC trading volume, giving both buyers and sellers the flexibility they need. With over 5.5 million active users and 500,000 plus followers on X, it's a platform built for scale. Please note that this is not financial advice and check the link in the description. The XRP Spot ETF filings are advancing, built through the no-delay amendment route, meaning automatic effectiveness after 20 days. Litecoin and HBAR already use the same mechanism. Canary Capital's CEO expects XRP's turn by 13th November 2025, though BlackRock publicly denies immediate plans. An ETF isn't validation, it's integration. It wraps crypto in a familiar skin, one that institutions already trust: pensions, family offices, sovereign funds. This is not adoption from below, it's absorption from above. Ripple's courtroom win against the SEC wasn't about price action, it was a legal green light, permission to step into the bloodstream of traditional finance. Now, with the Trump administration warming to innovation, regulation has shifted from barrier to bridge. Retail wants breakouts, institutions want clearance. When that clearance arrives, capital won't walk, it'll flood. So when the gates open, will you ride the wave or get washed out by it? Ripple's strategy isn't speculative, it's systemic. The RLUSD stablecoin now surpasses $1 billion in market cap. Engineered for corporate settlements, integrated with G-Treasury, the same dashboard Fortune 500 CFOs use to move billions. Ripple Prime, its institutional brokerage, tripled in volume, and the XRP ledger prepares to launch a lending protocol, turning liquidity into programmable credit. This isn't DeFi, it's industrial finance wrapped in crypto infrastructure. Each layer compounds trust, liquidity, and utility, the flywheel effect of real adoption. They're not chasing speculation anymore. They're rehearsing governance. Every protocol becomes a mini-state, every transaction a vote of confidence. Ripple isn't asking to join the system, it's replacing it, piece by piece. 2025 won't be remembered as the year of payments, it'll be remembered as the year payments became infrastructure. So when crypto stops being a label and starts being plumbing, will you still recognize the revolution you invested in? The puzzle pieces are starting to lock in place, slowly, quietly, but unmistakably. An XRP ETF pipeline is taking shape, not in theory, but in motion. Filings, amendments, advisor alignments, one after another, all inching closer to the institutional green light. This isn't retail speculation, this is infrastructure positioning. Fortress and Citadel didn't invest in a crypto narrative. They planted their flags in Ripple as a future settlement backbone, a payments chassis that can carry trillions in value with the reliability of traditional finance and the speed of blockchain. At the same time, NASDAQ is preparing to open its gates to tokenized assets, not as a side experiment, but as a structural integration. Public markets are quietly merging with on-chain rails, turning what used to be a frontier into a regulated highway. And yet, the market forgets quickly. Retail sees green candles, institutions see clearance timelines, and BlackRock, the most powerful allocator on the planet, is in no rush. They don't chase momentum, they wait for the moment the system locks into place, because approval windows can freeze, narratives can stall, prices can drift sideways for months while power consolidates behind closed doors. And macro doesn't care about your favorite chart. Government shutdowns, stagflation risk, liquidity drains, credit tightening, these forces can slice through any storyline. So what's the truth? Survival favors those who own the rails, not those who trade on them. Infrastructure charges rent in every regime. Expansion, recession, crisis, reset, markets crash, narratives die, cycles end, but toll booths endure. So the real question isn't, will XRP pump? That's the surface level game. The deeper question, the one that determines who survives the next decade, is this. Has Ripple already built and secured the lanes the entire financial world will be forced to drive on? If the answer is yes, then the price action today is noise, and the real story is only just beginning. Quick update on Unic. Their IDO for the UN token is live. The project markets a low FDV approach, referral rewards, and NFT perks for early participants. They present themselves as an on-chain OTC liquidity layer aiming to capture pre-market and institutional flows. Again, not financial advice. Check the link in the description for Unic's token page and white paper before deciding. Ripple Swell 2025 wasn't just a showcase, it was a declaration of intent. A line in the sand, a quiet signal to anyone still watching the industry through the old lens. The era of crypto versus Wall Street is over. What once looked like two rival worlds has now merged into one ecosystem built on contracts, custody agreements, licensing frameworks, sovereign partnerships, and a level of institutional coordination the public rarely sees. The dreamers called it decentralization. The early rebels called it disruption, but the people who understood the game from day one knew the truth. Control isn't seized, it's engineered. And in 2025, you can see exactly who's been engineering it. Swell showed us that the next monetary empire won't rise from meme pumps, influencer hype, or overnight speculation. It will rise from settlement systems, cross-border rails, liquidity corridors, and regulatory clarity. The boring, invisible infrastructure that quietly taxes every transaction in the world. The kind of infrastructure nobody notices until everyone relies on it. Because history doesn't reward the loudest voices, it rewards the architects, the ones who built the pipes, the switches, the tunnels, the rails, the ones who understood that value flows through systems, not slogans. A decade from now, nobody will remember who traded the hardest during these volatile years, but they will remember the entities that built the plumbing the entire global economy ended up depending on. So here's the real question. Are you positioning yourself on the hype or on the infrastructure? Subscribe to Wealthy Wise Finance, drop your thoughts below, because the people who understand the system early are the ones who survive the next cycle.